Here we go. The purpose of central banks like the Fed is to protect the banks, not you.
Some experts worry that the dollar's dominance may be under threat.
For decades, our country has been looted, pillaged, raped, and plundered by nations near and far, both friend and foe alike.
When you're saving those fake dollars, this will still be here. This could be the biggest opportunity you'll ever see.
What's up, guys? It's Graham here, and this is unbelievable. In the middle of tariff negotiations, retaliation from China, a weakening dollar, and global uncertainty, one investment has quite literally become the ultimate money printer, and that would be gold. That's right, while trillions of dollars are being erased from stocks in a matter of hours, gold is up nearly 30% year to date. It just hit its 55th record high in the last 12 months, and even Donald Trump just said that he who has the gold makes the rules. I mean, it's rather incredible, but with some analysts now calling for gold to potentially hit as high as $5,000 an ounce, we should really discuss why investors are suddenly cashing out and buying safe haven assets, how gold is quickly becoming the best performing asset of 2025, and if it's too late to buy in. Because despite gold now outperforming the stock market over the last 8 years, there are some major risks that everybody should be made aware of, especially before it's too late. Although before we start, as usual, if you appreciate breaking news videos like this, it would seriously mean the world to me if you hit the like button or subscribed. If you haven't done that already, it does actually make a tremendous difference for the entire channel, and as a token of my appreciation, I will do my best to read and reply to as many of your comments as I can. So thanks so much, and also a big thank you to Incogni for sponsoring this video, but more on that later. Alright, so in order to understand why gold has become such a popular investment and how high it could potentially go, we need to start here: currency. Unlike the US dollar, or really any fake money that could just be printed out of thin air, gold has been used as a viable currency for thousands of years. After all, it's difficult to come by, it doesn't rust, it doesn't tarnish, it doesn't degrade, it's easily moldable, it's functional, and it's so rare that all the gold mined in the world could fit in a 23-meter cube. However, in terms of the United States, gold didn't really make a formal appearance until 1792, when Congress passed what's called the Mint and Coinage Act, which created gold and silver coins in various denominations. From there, other countries around the world wanted to standardize payments for global trade, so the gold standard was adopted. This guaranteed that the government would redeem any amount of paper money for its value in physical gold, meaning transactions no longer had to be performed by handing over heavy bars, but rather paper currency that could later be redeemed for gold at the bank. This worked incredibly well for decades, until it didn't. After the Great Depression, in 1933, people began getting rid of their paper money in exchange for physical gold, and as demand skyrocketed, bank reserves started running low. So as a way to stop demand from outstripping supply, President Franklin D. Roosevelt and the government signed Executive Order 6102, which banned private ownership of gold and required that all citizens give back their physical gold in exchange for paper money. This resulted in the US government now having the largest stockpile of gold in the entire world. And after World War II, most countries simply pegged the value of their currency to the value of the dollar because our dollars were backed by gold. So if they had a dollar, it was theoretically just as good. Again, until it wasn't. See, in 1970, the United States budget was ruined by the Vietnam War. Global demand for gold began increasing faster than what any reasonable currency could keep up with. So as a way to help introduce more money into the economy, our dollar was removed from the gold standard, allowing the government to pretty much do whatever they want. Really, the strength of gold is simply its ability to store value and be around in times of economic uncertainty to hedge against everything else falling. And most models seem to forecast that it's a good idea to hold between 5 to 15% of your portfolio and no more than that. But for me, I would rather just invest a little more aggressively. I don't mind the volatility, and since I have a long-term outlook of the next 30 years, that tends to suggest that stocks still beat gold over the long term, and that's the way I'm generally going. Sure, this could very well underperform in the short term, but then again, I'm just a dude in a half-converted garage making YouTube videos, and I have no idea what I'm talking about. So if you agree or disagree with me, let me know down below in the comment section, and I will do my best to read and reply to as many of you guys as I can. And also, make sure to hit the like button, subscribe if you haven't done that already. Sincerely, it means a lot. Thank you so much, and until next time.
President Trump just announced that tariffs on China might be coming down soon, and the stock market loved it. We saw the Dow Jones jump by more than 1,000 points on the news that there'll be no trade war. But let me break down what's actually going on. That way you can be a smarter investor. Right now, the United States has a 145% tariff on Chinese goods. And in response, China has put a 125% tariff on United States goods. What does that mean? That if you're a company doing business in China, you are probably losing a lot of money. So companies like Apple, Walmart, and Tesla, who do a lot of business in China, have been bleeding because of these tariffs. So much so that there are many economists that are saying that these tariffs could put the United States economy into a recession. But this is where the White House says, have a little bit of patience. This temporary slowdown because of tariffs are better for the long term because it will allow the United States to renegotiate our trade deals with these countries to be more favorable for the United States. We just don't know when, and we don't know what it's going to look like. But for the first time, we might have a little bit of light at the end of the tunnel because President Trump has just said this about China specifically. Quote, 145%, the tariff is very high. And it won't be that high. It will come down substantially. It won't be zero. It used to be zero. To a company by investing in a fund like an ETF or by doing your research, depending on where you are in your financial journey, some of you may want to research individual companies. Others of you might hate that idea. You just got to find what's right for you. Personal finance is personal. I can't tell you what to do. I'm not a financial advisor. I'm just a random guy on YouTube. But the whole idea is when you find volatility, that creates opportunity. But it only creates opportunity for the financially savvy that understand how the game works. That's my goal with this video, is to help you to understand, yeah, we got some good news that maybe the trade war might not be happening, but we don't know what's going to happen yet. And while everybody gets caught up in the politics and the emotions and the arguments, I want you to read between the lines, find the opportunity, and use it as a way to build wealth instead of as a way to get angry or excited or whatever the emotion is. Find the opportunity. That way you can take better care of yourself, you can take better care of your family, and you can take better care of your community. That's what I want you to understand. And again, if you want some more resources, you can check out Market Briefs, which is my free financial newsletter. And you'll also get my investing masterclass when you join as a bonus as well. And with that, I will see you on YouTube tomorrow.
Spoke to him numerous times. So we're leaving and going to Rome, where we'll be attending the funeral of Pope Francis. Some of you are going to go. Anybody going? And it's going to be very interesting. We're going to meet with a lot of the foreign leaders. They want to meet. Trade deals are going very well. I think Russia and Ukraine, I think they're coming along, we hope. Very fragile. And Iran, I think, is going very well. We'll see what happens. We're working on plenty of things that shouldn't be worked on because none of this stuff should have happened. This should have been taken place by Biden. It should have been fixed by Biden, but he couldn't do it, nor could he come close to doing. So anyway, we're going to Rome to pay our respects, and we'll be leaving that same day. We'll be coming back home tomorrow night. And I'll see some of you over there. Otherwise, I'll see you on television.
Meeting this morning. You said you spoke with President Xi. Have you spoken to him since the tariffs? When did you last speak?
I don't want to comment on that, but I've spoken to him many times. Yeah, kind of a guy.
Time magazine that President Xi called you. When did that happen, and what did you discuss?
I'll let you know at the appropriate time. Let's see if we can make a deal.
Well, there we go. The latest on the tariffs and everything in that world. Pretty wild. Please like, please subscribe. See you next time.